Okay, so let's take a look at how a traditional plan would compare to a high deductible plan paired with an HSA. The traditional plan monthly premium is around $1,000, plus you have no limits to your out-of-pocket costs because of the deductible, coinsurance, and copay. Let's say here the deductible is $500. The deductible, as you know, is the thing that you as the employee have to meet before the insurance carrier kicks in. So they'll have coinsurance of 80-20 typically after you've met your deductible, and that'll be up to what they call an out-of-pocket max. Most situations it's going to be around $2,000. So you spend the first $500, you split costs on the next $10,000. They spent $8,000, you spent $2,000, and then you have 100% coverage. Unfortunately, this is usually only true for surgery, hospitalization, lab work. Out to the side of most traditional plans, you have copays. You have copays for prescriptions, you have copays for doctor visits, copays for the emergency room, and in some situations, copays for the hospital stay. So you don't ever get to a point where you have 100% coverage, because even if you've met this, that 100% coverage would only apply to, again, hospitalization, surgery, and expenses that are not covered by copays. Copays typically have no limit. You compare that to a high deductible plan. The premium for this plan is only $500, but the deductible here is $5,000. The way one of these plans works, your prescription costs, your doctor visits, your ER, hospital, surgery, all of the expenses for the whole family count towards this one deductible. Once that deductible's been satisfied, you have 100% coverage. So there are no copays. You reach $5,000, that's it. So this plan only costs $500 a month, but you were spending $1,000 in monthly premium on the traditional plan. So we're going to take that $500 a month savings and invest that in a health savings account. This money will go in tax-free, it'll earn interest and grow tax-free, and as long as it's used for medical expenses, it's going to be tax-free. So $500 a month equals $6,000 the first year. This HSA can actually be used for things other than just the deductible expenses, things like dental, vision, chiropractic care, LASIK eye surgery, other qualified expenses that might not necessarily be covered under your deductible with your health plan. We also know that accidents and critical illnesses make up 87% of major claims. So an additional policy can be bought to cover those things first dollar without having any out-of-pocket expense for you or spending any of the health savings account. If you look at it, you've got a $5,000 deductible and $6,000 in savings the first year. You really have a 100% plan from day one. The great thing about this health savings account is that the money you don't use actually earns interest and rolls over from year to year. So if you put $6,000 in it your first year and didn't spend any of it, the second year you'd have $12,000, the third year $18,000, the fourth year $24,000, and so on. So any of the dollars not spent you get to keep instead of the insurance carrier keeping that money. And again, before you meet your deductible, you're going to have the PPO repricing take place for the existing carriers. So just to give you an example of a recent claim I had in my family, my wife had a surgery and the bill charges were $23,000. But the insurance carrier price for the carrier we had with our high deductible plan was only $1,700 for that same claim. So we only had $1,700 count towards our deductible and have to be spent out of our health savings account. All right, so that's how a health savings account works versus a traditional plan. When we meet with you and go over your options, what we're going to do is provide quotes from multiple carriers. So if you look at this spreadsheet, we've got the $1,000 budget up here. We've got the age and census data for your family. And so carrier one has some deductible options, and this is the one we actually illustrated, a $5,000 deductible, $500 premium, left $6,000 in savings for the HSA, which effectively left you with a negative $1,000 exposure because you had more money in your savings than your first year deductible. If you added the accident and critical illness plan, you see the premium for that. Obviously, more premium lowers the amount of savings that can be put in your health savings account, but you still have about $5,000 in there, and you've got that protection for 87% of the reasons you would actually meet your deductible. We have a couple different blips here about each carrier, and what we want to point out is that these individual health plans are underwritten. Each carrier has different underwriting qualifications, different, a little more sensitive to different pre-existing conditions. But regardless of your health status or pre-existing conditions, we do have some options that are available for you. And you might be saying, I'm not interested in a health savings account. I would rather have a traditional plan. Well, those are going to be available as well. And we'll have the lower deductible, the co-pays for the doctor, prescription, the out-of-pocket max, all of the quotes for you on a traditional plan as well. And as you can see, because it's not an employer-sponsored plan, even though it's a traditional plan design, you still have significant savings over what you would have through your traditional employer plan.